how Merck's pricing strategy could spell disaster for global health, and how this shocking revelation might affect your portfolio today. Welcome back to Dr. Fred Markets, where we dive deep into today's financial news, analyzing trends, movements, and the stories behind the headlines. Today, let's embark on a journey that spans from the corridors of pharmaceutical giants to the cutting-edge developments in AI, and how these different narratives intersect in unexpected ways. Merck recently made international headlines when the International Consortium of Investigative Journalists, ICIJ, uncovered how the pharmaceutical powerhouse transformed its cancer treatment wonder drug into a financial blockbuster. While that sounds like great news for investors, there's a dark underbelly. Merck's steep pricing is pushing these potentially life-saving treatments beyond the reach of cancer patients worldwide. This pricing strategy might fatten their profits in the short term, but it also raises questions about the sustainability of such an approach if public backlash and regulatory challenges intensify. Meanwhile, over in Menlo Park, financial analysts are keeping a close eye as Meta innovates yet again, this time unveiling an AI version of Mark Zuckerberg to interact with staff. While it may sound like something straight out of a sci-fi novel, the decision signals Meta's pivot toward artificial intelligence becoming a key part of their corporate culture. With Meta's stock up 0.744% at $634.53 today, the implications of integrating AI in their strategic plans could be a critical player for future growth and a cautious predictor of workforce automation across the U.S. stock market. With U.S. oil prices soaring past $103 per barrel following the U.S.'s Iran blockade, energy costs are expected to rise, creating downstream effects throughout every sector, particularly industries like transportation and manufacturing that rely heavily on petroleum products. For observant investors, as the United States Oil Fund USO climbs by 2.92% to $128.47, this energy crisis could present either a risky opportunity or a financial pitfall, depending on how geopolitical tensions unfold and affect the broader markets. But let's not get too far ahead of ourselves. Here's a cliffhanger. What if the developments in AI not only shaped organizational efficiencies at tech behemoths like Meta, but also offered a potential solution to the skyrocketing costs in healthcare, spurred on by companies like Merck? Could AI be the revolutionary strategy to reduce costs and boost access to vital treatments? We'll dive deeper into this tantalizing idea, but first, let's look at the current state of the stock market. On Wall Street, the S&P 500 index reveals broad market resilience, climbing 0.98% today to a current level of $686.1. Amidst such financial volatility, investors might consider focusing on sectors that prioritize innovative solutions and sustainability. Companies investing in AI not only offer the allure of novel technologies, but also symbolize adaptability, a valuable asset in the shifting sands of today's financial landscape. Transitioning to the crypto market, Bitcoin remains relatively flat at $74.5 and $440.55, up a slight 0.08%, while Ethereum posts a teeny increase of 0.35% to settle at $2,378.98. Traditionally viewed as digital safe havens, cryptocurrencies are providing little volatility today, suggesting investors look elsewhere for major gains, particularly in rapidly advancing industries like AI or companies addressing growing societal needs, such as sustainable energy. Going back to our healthcare narrative, the juxtaposition of AI advancement in big tech companies like Meta and the controversy of Merck's high-priced drugs presents an intriguing question. Could AI be applied to health sectors to lower operational costs, enhance patient care, and even revolutionize how we approach global health crises? AI could streamline medical research or enhance precision in drug formulation, potentially offering more cost-effective solutions that defy current pricing constraints. Now, as we come full circle, consider the cross-market implications. If Meta's successful integration of AI can be duplicated within healthcare, driving down costs and improving access, this could alter our very perceptions of value within the market. Long-term financial stability might hinge on those willing to invest in organizations that not only profit, but also innovate towards sustainable solutions benefiting society at large. In conclusion, Today's financial narratives of AI and healthcare interlink more than it appears prima facie. They collectively tell a story of crisis and innovation, threat and opportunity, a reminder that, in investing, it's wise to look past short-term headlines and instead focus on profound shifts with genuine potential to shape our financial future. Merck's immediate profits may conceal the cracks of potential backlash, just as Meta's AI initiatives might illuminate pathways toward ethically responsible and financially rewarding futures. As a call to action, consider this. Reflect on your portfolio's alignment with the emergent themes of AI and sustainable healthcare solutions. Reevaluate your commitments not just in growth potential, but also in enduring societal impact. Stay informed, remain adaptable, and question today's strategies, because they might be the cornerstone of tomorrow's financial landscapes. Now, let's dive deeper into this discussion by examining how innovation within these sectors could reframe investment strategies in the coming years. The intersection of artificial intelligence and healthcare offers a myriad of possibilities, extending beyond mere technological enhancement to reshaping how basic care is delivered and experienced globally. We're talking about AI's role in predictive medicine, remote patient monitoring, and even personalized treatment plans tailored to individual genetic profiles. These advancements aren't just theoretical, they're happening now, driving down costs and making healthcare more accessible. As investors, identifying companies driving these innovations could yield significant dividends. For instance, firms specializing in telemedicine or those developing AI-driven diagnostic tools may present attractive opportunities. The value here isn't confined solely to financial metrics, but is amplified by the societal need, positioning these companies as pioneers in both health equity and capital gains. Similarly, in the sustainable solutions space, we're witnessing the rise of biotech firms focusing on renewable pharmaceutical production and environmentally friendly healthcare practices. These developments align with global sustainability goals, such as reducing carbon emissions and enhancing the efficiency of medical waste management, which in turn creates a supportive ecosystem for sustainable investments. But it's not just about choosing the right companies, it's about examining the ecosystems in which these companies operate. For instance, the health tech environment is supported by increased digitization, improved connectivity through 5G networks, and more robust data privacy frameworks. As these supporting structures strengthen, they will enhance the performance and scalability of healthcare innovations, As an investor, staying ahead of these trends involves more than passive observation. Active engagement is key. Attend industry conferences, follow thought leaders in AI and healthcare sectors, and participate in community discussions. The intelligence you gather from these interactions can provide an edge, keep you informed of emerging technologies, and help you reassess your holdings with fresh insights. While technology-driven sectors offer tremendous potential, risk management must remain a priority. Diversification, not just in asset types, but also in the geographical and industrial spectrum, is critical to mitigating sector-specific risks. Always prepare for unforeseen regulatory changes or technological disruptions that could impact your investments. In conclusion, the future of investing lies in recognizing and aligning with transformative trends that blend technological innovation with essential human needs. By harmonizing financial goals with societal progress, you can help shape a world that thrives economically, ethically, and equitably, an ambitious yet attainable vision for any conscientious investor. Investing this way not only promises potential returns, but also ensures your capital contributes to a sustainable and inclusive global future.